Did you know that you can actually get paid to invest in great businesses? Sam and I have been paid over $50,000 this year to invest, and in this video, I'm going to tell you how we did it. Hello, and if we haven't met, my name's Chris, and our channel is all about achieving wealth and financial freedom through a three-part strategy. Earn more, spend less, and invest the rest. Today, I'm talking about selling put options on businesses that you want to own at prices you want to pay, and there's actually somebody out there that's willing to pay you money to do this. Most people think that trading options is risky and not something that a self-respecting value investor would do. But when used correctly, they can actually reduce your risk, allow you to take advantage of stocks that are currently overpriced, and produce serious monthly income. And I mean, really, who doesn't want a little bit more income coming in at the end of every month? It may also surprise many to hear that Warren Buffett is one of the largest sellers of put options in the world. He's literally made billions of dollars doing exactly what Sam and I do and what you can do too. So what is a put option and how do we use them? A put option is a contract between two parties where the buyer of the option has the right to sell their stock and the seller of the option has the obligation to buy the stock at an agreed price on an agreed date. And for this obligation to buy the stock, the option seller gets paid a premium. We are the sellers in this contract, so we are selling our obligation to buy the stock at an agreed price by the expiration date of the contract. We only sell put options on companies that we want to own and at strike prices that are at or below the intrinsic value that we put on the business. And the amazing thing is that there's somebody out there who's actually willing to pay us for our obligation to buy a stock that we were going to buy anyways. Let's walk through an example. Let's say that we just valued company XYZ stock at $100 and it currently trades at $110. Normally, I would just have to wait because the stock is trading above what I would consider fair value. But here's where put options come in. I can go and sell a put option expiring in 1 month with a strike price of $100. And for this, someone is willing to pay me a premium of $1. If the stock is below $100 on expiration date, then I have to buy the stock at $100, but I still get to keep the dollar. And if I do have to buy the stock, this is excellent news. I was going to buy the stock at $100 anyways, and I just got paid to do it. There's no more downside risk to me than just buying the stock direct. And in fact, there's less. Instead of having a cost basis of $100, I now have a cost basis of $99. If the stock price stays above $100 on expiration date, then I keep the dollar and the contract expires. And I'll sell the put option with the $100 strike price expiring the following month. We're generally selling put options expiring in about a month with a premium between 1% and 2% of the strike price. I really want to reemphasize that we are only selling put options on companies that we want to buy and own long term and at strike prices that are at or below the intrinsic value. The intrinsic value of the business is what reduces the risk of this strategy. It is our collateral in the trade. The ultimate goal here is to build a position in a wonderful business and use the premiums to consistently reduce our cost basis. There are some really important things that you need to understand about put options. The first being that we only sell cash secured puts. That means that we have the money in the account to buy the stock at the strike price if it does in fact get put to us. Another really important thing about options is that options are traded in contracts, each contract representing 100 shares. So one contract of a $10 stock is going to be $1,000. One contract of a $100 stock is going to be $10,000. And one contract of a $1,000 stock like Tesla is going to be $100,000. So it can limit us on the stocks that we're able to participate in when using this strategy. Another important point when selling put options is that there's no guarantee that the shares will actually get put to you. So if the stock is being traded at a massive discount, I generally will buy my first tranche at the current price and I'll sell options on a lower strike price for my second tranche. You don't want to miss out entirely on a great investment opportunity. The last important point I want to make about selling put options is that a large component of the premium that you're paid for selling the option is based on how close the strike price is to the current market price. So we're generally using this strategy on stocks that are trading fairly close to their intrinsic value. You're not going to get 1% to 2% for selling the $100 strike price of a stock that's currently trading at $1,000. Options are amazing tools, but they do not work miracles. Sam and I sell put options every single month and it is one of our best and most consistent streams of income, but it needs to be combined with a long-term value investing approach. Otherwise, just like many options trading strategies, it will become incredibly risky. I am not a financial advisor. I am certainly not your financial advisor, and this is not financial advice, but selling put options on stocks that we wanted to take long-term positions in has been a game changer for me and Sam. And it is definitely worth the time and effort to get familiarized with the strategy. Before I forget, I want to ask the question of the day. Are you currently selling put options, and what has been your experience thus far? If you could, go ahead and leave a comment in the section below. All right, everyone, that's it for me. If you enjoyed the video, please go ahead and hit the like button. And if you want to see more content like this, please consider subscribing to the channel. Thank you so much for watching, and we'd love if you would connect with us in the comments. Remember, earn more, spend less, and invest rest, and we'll see you next time. Hey everyone, if you found this video interesting and want to see more content about how to put this strategy into action, then click here where Sam discusses our AT&T investment that we made using put options.